Hello everyone, welcome back to Banking and Finance with Chitrak. Today we are going to complete the KYC specific requirements chapter. So let's begin the final part. Correspondent arrangements of cooperative banks. So some banks provide facility to cooperative banks or societies to open accounts and which is used for the purpose of issuing at-part checks to their customers, that is the account holders or working customers of the cooperative banks, which favors third parties for making their remittances. So certain cooperative banks do not have the facility to provide checks. In that case, some banks provide the facility to those cooperative banks. So, some provisions need to be followed in respect of such arrangements to reduce the money laundering or terrorist financing risks. So, basically, commercial banks have to review or monitor each arrangement to assess the risk with it. For example, money laundering risks or financial terrorism risk or reputation risks. Then they have to maintain the rights to verify the records of the clients of the cooperative banks. Then the cooperative banks or societies using the facilities of the at-part check, so they have to use it for their own use. They cannot again give this check to third parties. Then it is to be used only for KYC compliant holders and for transactions of rupees 50,000 or more. Then the check should be used only by debiting the accounts. For walk-in customers against cash for less than 50,000, so they cannot issue bearer check, only the cross account pay checks is to be issued. Also, cooperative banks to maintain the following records. What? Records of at-part check covering all the applicant's name and account number, beneficiaries details and date of issuance of the check, and sufficient balance drawing arrangements with the bank for this purpose. We'll discuss about the walk-in customers. Walk-in customers means a person who do not have an account-based relationship with the regulated entity but undertakes transaction with the entity. That means in cases of walk-in customers where the amount involved is rupees 50,000 or more, KYC document as well as customer identification procedure will be applied. If a customer is intentionally structuring transactions to avoid individual transaction falling below the threshold, filing of systematic transaction reports need to be examined. Then in respect of international transactions, the KYC requirements apply to all transactions of any value. Then if the transaction is below 50,000, PAN or Form 60 will be obtained along with usual proof of identity and proof of address. Then demand drafts, bankers checks and NEFT. Issue of DD or bankers checks or NEFT for rupees 50,000 and above should only be by debit to the customer's account or against checks. Cash should not be accepted. Also, banks should not make payment of check, drafts, pay order, bankers check if they are presented beyond 3 months. You know that every such instrument has a time period of 3 months. So, if they write the date of 1/1/2025, let's suppose, then you have to make the payment or they have to do the NEFT within 1/3/2025. Then name of the purchaser must be incorporated on the face of the demand draft, pay order, bankers check by issuing bank. So who is the purchaser of such DD, like who is going to get the DD, the name of such purchaser should be mentioned. Then PAN of customers obtained and verified for transaction as per income tax rule or Form 60 should be obtained if PAN is not available. Next we discuss the third part of this chapter, that is requirement for business activities. First, what is the requirement? We have wire transfers. Wire transfers are very convenient mode of transfer of funds across the world. It's a boon to trade and commerce, but is also very risky as money launderers and terrorists find it very convenient for their purpose. FATF has recommended some minimum information that should be accompanied with such transfers. RBI and BCBS have also issued guidelines on due diligence and transparency regarding the covert payment messages related to cross-border wire transfer. Now, domestic wire transfers. All domestic wire transfers of rupees 50,000 or more must include accurate and meaningful originator information, that is the name, address and account number of the person who is doing the transfer. The originating bank will be responsible for the KYC of the beneficiary of the payment and the receiving bank will be responsible for the KYC of the remitter. Now, cross-border wire transfer. All cross-border wire transfers must include accurate and meaningful originator information, particularly the name and address where an account exists, its number and a unique reference number. Then certain norms are to be observed, that is appropriate information including in-payment messages like the full name of the beneficiary, details of the beneficiary's account with a clear bank and branch name. Then information in payment messages should not be omitted, deleted or altered or used for the purpose of avoiding detection of that information by any other financial institution in the payment process. So if the customer has given some details or information in the payment messages, that should not be omitted by any of the regulated entity in between the payment process. Then the information requested by another financial institution about the parties involved should be provided subject to applicable laws. Some exemptions are there. Interbank transfers and settlements where both the originator and beneficiaries are banks or financial institution would be exempted from the above requirements. Responsibilities of banks in the chain. Originating banks must ensure that appropriate information accompanies wire transfers, while others in the payment chain are required to monitor the payment they process. So the banks must take adequate steps to have proper information about the transfers. Now, for effective monitoring, banks need to have knowledge about the customer's activity. However, it's not feasible for intermediary banks who only handle the transaction for their correspondent bank. So the bank which is transferring the money or who is at the beginning of the chain, they should have the knowledge of the customer's activity. Now here it's given different responsibilities of banks in the chain. The ordering bank, that is the originating bank, is responsible for inclusion of complete originator information, customer due diligence of the originator, verification of the originator information for accuracy, keeping the record of the information. Messages sent to covered intermediary must contain originator information as the local regulations like the name, address and account number or a unique reference number, and the beneficiary information, that is the name and identifier code, as well as other beneficiary information sent directly to the bank of the beneficiary. Such identity information as possible should be included. So this is the responsibilities of the originating bank. Then the intermediary bank. The intermediary bank are merely the transit points for funds whose responsibility are to ensure that originator information accompanies a wire transfer is retained with the transfer, due diligence of the banks offered correspondent banking services, to ensure in real time that required originator and beneficiary fields of the cross-border cover payment messages are not blank. Where fields are blank, appropriate measures should be taken like declining the process, obtaining the missing information from the originator bank or the precedent intermediary bank, filing a report of suspicious activity with local authorities. Then the documents taken and the decision for taking such documents and their reasons. To conduct name screening in accordance with its local regulations, monitored the relationship with the corresponding bank. Where information is meaningless or incomplete, it may obtain proper information from the correspondent bank and also consider filing STR. And what is the responsibility of the beneficiary bank? Beneficiary banks ultimately make the payment to the beneficiary, who are typically their customers. The responsibilities include identifying the beneficiary and verifying its identity as per the due diligence, monitoring the activities of the customer, that is the beneficiary, identifying the wire transfers lacking incomplete originator information, transparency problems to be considered for assessing if a wire transfer or related transaction are suspicious. Then they need to file the suspicious transaction report. Now, sale of third-party products. You know that in recent times, bank has started to sell or distribute a lot of third-party products like mutual funds, life insurance and other financial products. So the concerned entities, that is the AMCs, life insurance companies, will be responsible for the KYC AML of the customers. But RBI has advised banks to carry out the KYC procedures for customers whom they are selling the third-party products. Now the final part of the chapter, online customers onboarding methods. In recent times, many banks has approached the online method to open their accounts. So to facilitate such customer onboarding using the internet facilities, two modalities have been framed. One under the PMLR or Prevention of Money Laundering regulations, that is the digital KYC, and the other under the KYC directions, that is the video CIP procedures. Some features of the digital KYC process is that the reporting entities shall make available at customer touchpoints an application for digital KYC process. So application should be there. Then the access to the application will be through a login ID and password or live OTP or time OTP. Then the customer will visit the regulated entity's touch point, or an official of the RE will visit the customer's location. Live photograph of the customer is to be taken by the authorized officer and it is embedded in the customer application form. The photograph of the customer will be watermarked and stamped with the customer application form number, the GPS coordinate, authorized official's name and unique employee code assigned by the entity and the date and timestamp. Then live photograph of the original officially valid document and proof of possession of Aadhaar where offline verification cannot be carried out shall be captured and watermarked. All the entries in the customer application form should be filed as required by the document and information furnished by the client. The information is authenticated by the customer through an OTP for confirming message that is treated as a signature on the customer application form. Then masking of Aadhaar is required. If the proof of possession of Aadhaar is collected as officially valid document and the customer is not seeking government benefits, banks should ensure that such customer redacts or blacks out his Aadhaar number through appropriate means where the authentication of Aadhaar number is not required. The above position incorporates changes made by the Aadhaar and other laws in 2019. So in March 2019, this law was passed that masking of Aadhaar needs to be done. Then Video Customer Identification Process or VCIP. KYC directions contain procedure for VCIP or video based customer identification process, which is an alternate method of customer identification with facial recognition and customer due diligence by an authorized official of the regulated entity by undertaking seamless, secure, live, informed, consent-based audio-visual interaction with the customer to obtain identification information required for the customer due diligence purpose. Also, to ascertain the veracity of the information furnished by the customer through independent verification and maintaining audit trail of the process. So basically, it's a video-based identification process where the customer gives a live verification of his face through an audio-visual video. Such process of complying with prescribed standards and procedures shall be treated on par with the face-to-face CIP for the purpose of this master direction. Then some permitted situations. VCIP can be adopted for the following situation: for CDD of new customers, that is for onboarding of individual customers or proprietor in case of proprietorship firm or authorized signatories or beneficial owners in case of legal entity. For a proprietorship firm, the equivalent e-document of the activity proofs with respect to the proprietorship firm should be obtained besides undertaking the CCD of the proprietor. For conversion of existing accounts, account opened in non-face-to-face mode using Aadhaar OTP-based KYC authentication may be converted into normal face-to-face account through this process. Updation of KYC for eligible customers, periodic updation can be done through this mode. Then we have the VCIP procedure. The highlights of the procedure is VCIP process should be operated only by officials of the regulated entity specially trained for this purpose. The sequence or type of questions during video interaction shall be varied in order to establish that the interactions are real time. The authorized official of the regulated entity performing the VCIP shall record audio and video as well as capture photograph of the customer present for identification and obtain the identification information using any of the following. What is that? OTP based Aadhaar EKYC authentication, offline verification of Aadhaar for identification, KYC records downloaded from CKYC, equivalent e-document or OVD including DigiLocker. Regulated entities should ensure to redact or black out the Aadhaar number. Offline verification of Aadhaar using the XML file or Aadhaar secure code should be carried out within 3 days of this generation. The economic and financial profile submitted by the customer should be confirmed from the customer undertaking the VCIP. A clear image of the PAN card is to be captured. Then, except in cases of ePAN, use of printed copy of equivalent e-document including ePAN is not valid for the VCIP. Regulated entity shall ensure that photograph of the customer in the Aadhaar OVD and PAN ePAN matches with the customer undertaking the VCIP. Assisted VCIP shall be permissible when banks take help of the banking correspondents, facilitating the process only at the customer end. All accounts opened through VCIP shall be made operational only after being subject to concurrent audit, and the entire data and audio recording of the VCIP shall be stored in a system or system located only in India. So finally this chapter is completed. I hope this was beneficial to you because I have discussed in detail every point which was present in this chapter, and I hope this has helped you for your preparation. So do like, share and comment if you have been helped with this, and subscribe the channel for the upcoming videos. Thank you. All the best.